Hello everyone, welcome back to another episode of How Founders Think. Today we have Mr. Akshay Mehrotra with us. He is the founder and CEO of Fibe, is India's biggest lending platform and a fintech giant in India and globally. Thank you so much, sir, for coming on. So what inspired you to take up entrepreneurship and especially build in the fintech world?
So I think after many years of corporate life, we always wanted to look at an opportunity of entrepreneurship. And it was always the path to find a new area which could be disrupted and had a larger opportunity to create a market. Right? And 10 years back, when we set up the first digital lending app, we felt that there's an opportunity emerging. There's a large customer segment which is not being catered to. And we
Right.
felt that we can cater this audience and a business
Mhm.
model can be created.
Right.
The second part of building anything new is always, can you bring in your past learnings and can you build up a larger outcome?
Right.
As many years in corporate field, you realize that there are many areas that you believe can be disrupted, right? And you
Right.
also found path and saying this looks like something which could give me more excitement for many years.
Yeah.
And with the emergence of fintech just coming out,
Hmm.
we were India's first digital lender, and that
Right.
created a path of building something new, unique. And today, after doing almost 35,000 crores of loans, it's really given us a pathway to say that it's possible to give loans on a digital asset, to build a
Right.
large company, build a large recognition of what you do, and and there is a path to build a much larger company in time to come.
Right, definitely. So when you were starting out, what was your biggest frustration with the Indian financial system that made you want to build India's biggest lending app?
Uh, and we were trying to solve for the consumer ask. The consumer said that if he needs money, it has to be more seamless. It should not be felt like doing a large financial transaction. It should be available 24/7 and it should be in a simple manner. Right.
Right,
See, we tried to solve for that simplicity.
right,
Today, if you look at a customer should be able to, let's say, receive money in his bank in under a minute, right? From downloading the app to filling up a few questions, completing your KYC, then us underwriting and finally moving money to a customer, we have
right,
found path that can be done in a couple of minutes,
right,
right? And that is what was the simplicity we wanted to solve for. At the same time, we wanted to make the effort and the result very unique. So when young people came in, they wanted an experience which was, oh, it didn't feel like a financial product. It felt like a
right,
consumer product,
right,
right? We wanted them to, they always came back and said, there are too many jargons and too confusing English and processes mentioned,
hmm.
right? And finally, it felt like a very serious relationship happening, right? You sign papers, you interact with someone who's asking you tough questions, right? And
Hmm.
fundamentally, we kept asking, why do you need the money? Right. So
Right,
we democratized that format. We said, apply when you like, how you like in a simple manner. We
hmm.
eliminate the human being from the interaction, right? We made the not only a self-serve journey, but a journey which is unrecommended, which means you are free to choose the product. You choose to take it, yes or no. You have an option to pay back any given time you like. There's no prepayment penalty on
Yeah,
it. And you can technically, the interest is calculated daily, which means that if you don't love us, you can close the product today.
right,
Right. The results were very different. Right, the consumer experience became so good that we started getting consumers coming back regularly to us.
yeah.
Today, we position ourselves as the highest retention rate in financial services anywhere in the world. Right,
Wow.
it's not the Indian company that we outperform. We perform majority of the, let's say, financial services companies anywhere in the world,
Yeah,
right? And the second part is because the consumer is never pushed a product. There's no one selling to you. It's a self onboarding capability. The customer said, "Yeah, this is a very different experience than my traditional bank." And today we don't lose the consumer to a competition while they
yes.
lose to us.
Right. So you could say fundamentally your biggest problem was that the whole process was just way too complicated for the Indian consumer or for any consumer for that matter, and you also brought a lot of simplicity to that with Fibe.
Yes. So simplicity of a product journey is
Yeah.
extremely important. Clarity and not having any hidden statements is also very important. Mostly financial services also about complications,
Yeah. Yeah, that's
having a
true.
document which is very complex for people to understand.
Right.
Democratizing understanding that is very important. And then removing, hidden charges is also very important. The consumer feels fair. What he bought, what he agreed to pay, he
Yeah.
exactly paid that.
Yeah. So, as you said, you were India's first in this lending sector. So you operate on a buy now, pay later model. So, how did you build trust and consumer trust in India? Why don't people see, Fibe as just another debt trap? How did you build trust, especially with Indians? Because money is so dear to Indians, you know?
Good question. So our first product was called as EarlySalary.
Right, yeah.
It's a loan for working professionals.
Hmm.
It had a huge fan following on day one on opening. We actually within a year had more than 1 million users.
Oh, wow.
Right. We now have almost 35 million users of the mobile app who come to us looking for money, transact with us, and do many transactions. Uh, what was the unique problem that we were trying to solve? Majority of the time, people will never give you money into your bank account in real time.
Hmm.
Right? They will make you wait for some time before they transfer money. One of the first disruptions we did is the money transfer switch. We moved to the mobile app, which means at 2 o'clock in the morning you can wake up and transfer money to your bank account.
Right,
That was the first uniqueness with any company said it's possible to do. We build the rails, we build the systems, so we are available 24/7.
right.
Right? The second part was really start building use cases for consumer to make the journey better.
Hmm.
Part one. So when our first product gives you a personal loan, we said there are many use cases where the consumer would like to take up credit, but he doesn't want to limit himself looking at being frivolous. We
Right.
called it Impact BNPL, and our first category was healthcare finance, where
Okay.
people turning up a hospital for any surgeries can get a loan interest free
Hmm.
and paying up to 24 months as an EMI. The second one was in skilling, where a working professional can upgrade his skill set. And both these areas we're able to build in a no cost EMI.
Right.
Right. Usually, BNPL was always considered as when you want to buy a mobile phone, you'll get a loan. But when you
Hmm.
need money for medical emergency, people say there's no one giving you a loan.
Hmm.
Right.
Right.
Today, we're available in more than 8,300 hospitals, clinics, and centers.
Wow.
We're available in more than 100 universities, where we have been able to bring a subvention program, which means the consumer doesn't pay any interest.
Hmm.
If you take 1,20,000 rupees for 12 months, you'll pay 10,000 rupees a month,
Right.
right? And it simplifies the entire offering for the consumer. We're integrated into the billing system,
Hmm.
which means you can get your treatment started in 1 minute,
Hmm.
right? And the hospital will honor our approval equal to an insurance company giving a claim,
Right.
right? So it will in transparency, it'll build ethicality, right?
Right.
We're giving money for a right cause. It's not frivolous, so you're not buying mobile phones or you're not spending money on online shopping,
Hmm.
right? You're using it for a good reason. And it allowed us to reach out to a very large customer base and build a dependability in our business model.
Right. So, sir, actually, my next question to you is gonna be that how did you get your first 1,000 users? But as you told me, you got your first million within a day. So, I don't think the
How did I
question
get my first?
1,000 users on EarlySalary.
Oh, it was not easy. I think our first month was not very easy.
Okay.
Many because we if I look at, I moved to Pune on 4th of October. On 23rd of February, which is like 100 days, we got the license transferred to us. We built a new product. We built the entire 100-member team, set up the mobile app, set up the backend system, and gave our first loan.
Right.
Right. So we realized that we were quite early in our beta. We had lots of buggy journeys.
Yeah.
But our customers were very humble to us. They realized there's nothing as good as this they've ever seen,
Yeah.
right? They started recommending us in a very large manner, right? And if I look at the first 1,000 borrower number was achieved maybe in less than a month and a half,
Yeah. Wow.
right? It was a very unique experience, right? Typically, it's not easy to find people who are good quality,
Yeah,
right?
definitely.
It's see, giving money is not an easy, is not a tough part. Getting the
Mm-hmm.
money back is the complicated part,
Oh, yeah. Yeah.
right? You have to give money to right people who honor the transaction and come back and repay. Today,
Right.
if you look at on the platform, typically almost for every 100 rupees going out, almost 99% of that money comes back on time.
Right.
So it's a great example that we are able to select the right people to give money,
Yeah.
right? They continue to pay us on time
Yeah.
so that we can build a larger franchise and deploy more money on the consumer.
Right. Right. So we were just speaking about how Fibe was formerly known as Early Salary. So what triggered the change to you changing the name to Fibe? Was it because you thought that that wasn't scalable across many industries, or what was the reason?
So when we launched Fibe, it was to build out the category thinking
Right.
that we will address one category and we will start understand the category well. Our
Hmm.
transition to name Fibe was backed on two areas. One was the ability that we will lend across product classes to consumer.
Right.
We do personal loans, we do credit cards, we also do healthcare loans, we do education loans. We just introduced micro savings, which
Wow.
digital fixed deposits. We launched solar rooftop financing, loan against mutual fund. As we were launching more products, it became important that consumer looks at us as a financial superpower
Right.
or a financial super app. And Five is the new way of doing finance,
Yeah.
right? And that was the evolution of a four-letter word to educate our people of how they can get finance in a better manner.
Right.
At the same time, the ethos remains exactly same. Like I mentioned, upfront clarity of what you pay.
Right.
All product interests are calculated daily, which means if you want, you can pay back tomorrow morning,
Hmm.
right? And the customer journeys are unassisted and no one pushing a product to you.
Right. So, so Fibe has like extremely fast loan approvals, right? So how do you balance this? How does the back end work? Where does Fibe come in and earn money? So can you explain all this?
Right. So the reason we can be fast is because we build scorecards.
Okay.
People now talk about AI-based systems. We were a
Right.
ML-based company when we started 10 years back. The
Right.
largest investment we did is in building risk scorecards, which can assess the consumer really fast.
Right. Right.
Today, the version 9 scorecards, which are running, build almost 25,000 runtime variables about a consumer,
Wow.
combine his bank statement, bureau, EPFO, and Aadhaar data in runtime to make a decision.
Right.
Typically, the consumer wait time is now down to 3 milliseconds,
Wow.
right? And that allows us to assess the customer in a good manner. The
Right.
second part of this business is how do you really build, let's say, reduction in OPEX as you build out a franchise so that you can also make money. And here you deploy your own capital. We are a balance sheet player. We lend on our own balance sheet, which
Okay.
means we have to go and borrow in the market. 2 years back, we were also able to list our NBFC, which means we can raise
Yeah.
NCDs in the market to provide liquidity. We also work with other banks to give us
Right.
loans. We also do co-lending,
Hmm.
right? So in a month, we almost do 150 or maybe $180 million, almost 1,400 crores a month of disbursement.
Hmm.
We are able to give an average customer 100,000 rupee and
Right.
then build collections practices of, let's say, an average customer paying 9,000 rupees a month. So more than $100 a month he pays as EMI. And all
Right.
of this is mapped in 840 cities that we run business in, while
Okay.
the total enterprise is just 1,000 people.
Okay. Wow.
right? So the efficiency is extremely large because of
Yeah.
the technology and the innovation that we do on the technology to run business at scale across the length and the breadth of the country.
Yeah. Wow. Okay. So with also the, there's so many, new ways of payments. You could say in India, there's UPI, there's these rings and whatnot. So, is there any way, Fibe is leveraging these to make, borrowings easier?
Oh, yeah. So a little time back, we had launched the country's first UPI-based credit card.
Okay.
What
Wow.
was the innovation was that first the card became more secure because it had no number on it.
Hmm.
The second, we were able to build RuPay rails to do credit card transactions for the consumer, which means that the merchant had a lower cost to him,
Right.
right? It was also a real runtime card getting issued, which means you can get the card on a digital asset immediately,
Hmm.
right? And being RuPay means that you can also literally pay your metro ticket using a UPI transaction, right? Usually, credit cards are
Yeah.
meant for high ticket transaction. You need a POS
Yeah.
terminal.
Yeah.
By getting on the QR, you eliminate the terminal requirement. It became universally accepted. What payments you were doing on your debit, you could move to credit. So we have been able to get that large benefit to consumers coming. The
Right.
second rails on, let's say, some of the India stack has been really customer onboarding. And so today, let's say you can set up your repayment instrument on UPI. It's faster, it's quicker,
Yeah.
which means the customer turnaround time has become phenomenally lower. And
Hmm.
the good news is we've also applied and received our license for UPI payments. So
Wow.
hopefully in the next 1 year, we'll introduce uh, payments on UPI on our platform.
That's great. So, so with RBI's new lending guidelines, like you already said, no hidden charges, and there's also things such as direct loan dispersals, I think. How did Fibe adopt these while still keeping, the customer experience and onboarding really fast and really smooth?
I think when the guidelines had come out, there were two components. Of course, we were quite uh, close to how the regulations were coming in. We helped form the SRO in the market, right?
Right.
So, interestingly, when the guidelines came out, I think in 48 hours we were complied, which means
Wow.
that almost for a 3 month window, we were the only few lenders operating in the market.
Okay. So what helped you, become compliant so fast in just 48 hours?
I think the first part was we always were asset heavy. We were lending our own balance sheet,
Right.
right? Which meant that we are not playing the platform play only.
Hmm.
The second part is majority of the guidelines were linked to customer centricity, right? Upfront showcasing what you do, don't levy undue charges, make sure that you disclose the correct rates, etc. We're a company who's always doing this from day one.
Right.
Right. The other part of building a business is you need to have a large compliance team who educates you what to do correctly, and we invest in this team very early,
Hmm.
right? Which allowed us to be more compliant on day one and faster.
Right. So, what do you think made you scale so big? Because you're India's biggest consuming lending platform now. So, is there any advice you would give for anyone who wants to, scale their startup in any industry?
I think the first rules are very simple. Right? Remain focused on your first category and do a good job. Right?
Right.
Don't be in a hurry to keep opening up new problems to solve. Right? For example, for almost 7 years, we were single line, monoline company product.
Right.
Right? We said unless we start generating, let's say, nearly let's say 100 crores of profit a year from that first product, we don't want to invest in the second one.
Right.
Right? The
Agreed.
second is when you choose an area which is very large for you to disrupt. Don't start solving for small problems.
Hmm.
Like today, we created skilling and education as a category. That's a $1 billion opportunity in itself.
Right.
Healthcare is also a $1 billion opportunity in itself. So every
Definitely.
area that we're looking is large. So we can spend disproportionate efforts to go build a large ecosystem behind it.
Hmm.
Right. And I think that's the firm advice. Don't do too many things. Once you choose what has to be done, it should be large enough for you to be engaged for many years to go and solve that problem.
Right. So, so 5 years from now, two questions. Where do you see Fibe and where do you see the fintech industry in India as a whole? Because these past few years, it's been like the gold rush of startups in India. Everybody is doing a startup of some kind. So yeah, so where do you see Fibe in
Yeah, I
five
think
years?
we saw I saw the first innovation taking place in UPI, right? We saw the UPI payments. Now UPI is the single largest payment system in the world.
Yeah.
We believe that lending could be the next big game changer.
Hmm.
See, India has close to 140 crore or almost 1.4 billion people,
Hmm.
right? Less than 5% of them have access to any credit.
Right.
That's a huge opportunity for someone to cater to, right? Imagine
Definitely.
if 800 million people are on UPI.
Hmm.
If all of them get access to credit, that could be a huge opportunity coming in. And we see that is something that we believe that fintech lenders will ride that wave in the next 5 years. And
Right.
market is ready, regulations are ready, the
Hmm.
opportunity is becoming better to do. And of course, supply of capital is picked up in the startup economy in this
Yeah,
area, which means you can build out larger outcomes.
definitely.
For Fibe, we have always positioned ourselves as a large unsecured lender. We believe that the building a 10x size company in the next 5 years is possible, right? I look at some of our uh, larger ecosystem players also in the market apart from us, and I think we will see in the next 5 years 4 to 5 entities who are quite large, maybe 10 times the current size of them, getting established, being fintech, being very lean on people, very
Right.
good in technology, at the same time solving her consumer problems in lending. And we'll see those disruptions coming in.
Right. So, sir, also, um, that you were talking about capital, right? So, Fibe is about a $600 million company, if I'm not wrong.
Trying to ask your question.
Yeah. So, what would your advice be to anyone to approach fundraising, and how did Fibe approach fundraising?
For us, we want to transition quickly from VC to PE,
Right.
right? We were very fortunate that we raised a paper seed, very early Series A. Uh, in fact, Series A to Series B was a 30-day window. So
Wow.
we were able to raise capital early. But the lessons we learned were on two sides. Capital only comes when you're executing in a very good manner,
Hmm.
right? You're raising capital to build out a very large outcome. Non-profitable companies should not raise money. There's no reason for it,
Right.
right? And you need to find a larger outcome and larger out exits for every new investor coming in, which
Right.
means the company has
Definitely.
to give returns to every new investment,
Hmm.
right?
Right.
Uh, I would say these are simple things that we have followed always. Yes, we have been successful in raising a fair amount of capital, but we've
Hmm.
been also very conservative. We haven't burned the single dollar in this entire 10-year journey. We have remained
Wow.
profitable
So
for many
profitable since day
years.
one.
Yes.
Wow, that's amazing because that's very rare with the tech startups and fintech startups because
No,
usually
absolutely.
usually they burn a lot of money to capture a bigger market size. They spend a lot on marketing, but I mean the main end goal for any company or any startup is to make profit. So
Yes.
it's very rare seeing fintech companies worth this much make huge profit. So yeah. So you said from your Series A to Series B, that was only about a month, right? So how did you manage to raise money so efficiently, and what do you think made the investors want to come in?
I think the very early investors first look at the founding team or
Definitely.
the founder and look at his ability and willingness to build out a company.
Right.
As you start transitioning to build the company, they start looking at business model. And
Hmm.
next, they come back and look at is the scalability and differentiation there in that business model,
Right.
right? And as you build out an enterprise, you need to keep showcasing in that manner. First,
Right.
you have solid pedigree to do what you do.
Right.
Next, as you're executing, there is a game plan that you have to build out a larger entity. And when
Right.
you're and when the large entity is getting created, is then when you need the capital to build out a disproportionate value proposition coming in.
Hmm.
Right. So many of our investors looked at us and saying, no, this is a problem which is not easy to solve.
Right.
Right. In fact, almost all of our investors have never invested in this category anywhere in the world.
Wow.
Right. But they looked at us and said, yeah, if these guys can solve for it, it looks like interesting. At the same time, we showed them phenomenal growth and capability. For
Definitely.
example, if I look at we're from, let's say, when TPG came on board, we're almost 20 times larger than that size today. Right? So we
Wow.
could execute once we raise more capital. Right?
Hmm.
And even today, we talk about disproportionate growth rates and disrupting the category. We are not saying that we'll do the same thing. We'll do newer businesses. We were able to incubate two new businesses, and each
Wow.
of them are now showing path of being very large, profit contributing already. Right? So this is what investors will keep looking at your entity.
Right.
And as you keep raising, this will be some of the questions that always have to be answered.
Hmm. So you also said that you're moving from VC to PE. So can
We
you
moved very early. We moved
right.
very early in that journey.
Okay. So can you elaborate more on that? And um
It's about a mindset. VC is about hyper acceleration
yeah,
and money coming in for that purpose.
right.
Private equity is about stability in business and
Definitely, yeah.
largeness to create market leadership,
Hmm.
right? And I think that's what the differentiation comes in. You need to be very uh, righteous in your company structure as you move in that VC to PE landscape. And that's where I would say the boys become men in the
Right.
startup world, right? Where you really start looking at everything to a detail. If you say you're achieving an X number, it needs to be achieved to perfection.
Hmm. So in building out such a big business, what are your top three core fundamentals that you always stand by or stick by, that you will always give this advice to someone, or you will always believe in this,
I think the first is consumer in the middle,
right?
right? Not problem in the middle.
Hmm.
The second is you're only as good as the team that you really build and work with,
Right.
right? And third, learn to disrupt, not solve problems only.
Right. Okay. So this would also be your advice to someone
Yes.
wanting to build in any sector at all.
Oh, absolutely.
Right. And do you have any advice for anyone specifically wanting to build in tech or finance or fintech?
I think fintech is a combination of technology and financial prudence,
Right.
right? So it is I would say a more tougher area,
Definitely.
right? Because the usually, let's say in technology, the incumbent cannot outspend you.
Right.
A bank can always invest in a few $100 million to build its technology. So you need to
Hmm.
be very, very focused on what you're trying to solve for,
Right.
right? Like in e-commerce, your incumbent are mom and pop stores,
Yeah.
right? They can't build a platform.
Yeah.
A bank can any day build a platform that you like.
Easily. Right. They already
So
have
that's
all
the
the
difference.
capital. They have
Yes.
all the
So
capital in the
that's what
world.
is the differentiation needed that you have to do. That
Right.
solve for the consumer is more important, and fintechs, which have remained around solving for the consumer, either on B2C or B2B side, have actually succeeded in a much better manner.
Right. Um, so two final questions. Um, a lot of times startups or companies, they chase valuations. And to do that, as we were speaking earlier, a lot of startups lose, especially in tech and finance and fintech, lose a lot of money, just to, get a brand ambassador, or maybe, spend a lot of money on marketing, or chase a bigger valuation, greater valuation. So, what are your thoughts about that?
Uh, so I've been a marketer all my professional life,
Wow.
right?
Okay.
I don't think by spending disproportionately you build a GMV,
Right.
right? We have a large business, absolutely no branding ever done. Maybe
Yeah.
performance marketing, yes, but no branding ever done,
Right.
right? We have a huge customer franchise built in. It's because the consumer comes to you for an answer,
Right.
right? And secondly, valuations are short lived. You have to deliver profitability to
Exactly.
really deliver. And our business is very well measured on profitability.
Definitely. Yeah.
You see, giving money is very easy. You can give money to billions of people. It has
Hmm.
to come back,
Yeah.
right? You only make money on interest income that you generate,
Exactly. Yeah.
right? So you don't have to be very large. You have to be very precise on who you give money to.
Definitely. And so my final question to you is, what is next for Fibe in these couple of years?
Actually, for us, the need to remain in our category and really prove that the category we can become very large. So
Right.
first is in let's say in the next 5 years, can we become 10 times our size is going to be our first objective. The
Wow.
second objective is how do we play the platform play? As
Hmm.
we have such strong relationship with our consumers, they are growing, right? They're growing from being early in their work career to become more seasoned as in their working class income potential, etc. We need to make sure we grow our product stacks to maintain our relationship in a long manner with them. I would say, and of course, ethicality is the large piece. So wherever we can find use cases where consumers are benefiting, we'll
Right.
invest our efforts to really build out a larger outcome.
Right. Thank you so much, sir.
Perfect.
This was great. Thank you so much for coming on. It really means a lot.
Sure. Thank you. Take care.
Thank you, sir. Thank you. Bye bye, sir.